So let's have a look at the exam technique for your account balances. So we're going to still do the general procedures. We're going to put down the applicable assertions now, remembering that the applicable assertions are going to be your account balance assertions for the balance and also your class of transaction assertions for any transactions. And then you're going to develop your procedures to test those. Alright, so in terms of the general procedures, guys, I've put them down for you here so you don't have to repeat them. But there are some changes that I want you to see, because we're no longer dealing with a class of transaction and therefore talking about journals or lists of transactions. We're now dealing with an account balance. So where do we get the detail? That makes up a balance. Think debtors, think creditors, think PPE, think inventory. Your debtors is your debtors ledger. Your creditors is your creditors ledger. Your PPE is your fixed assets register. Your inventory is your inventory listing, or register if you want to call it that, or ledger. So now what we do have, instead of having a journal, we do have that individual transaction recorded in a ledger for an account balance, or a register, or something that you may be not sure of, like loans. You would just ask for a list of loans, which would then give you the detail when you're testing all loans instead of just individually. So now what's going to change is where you used to have agreeing the total of the journal or the list of transactions to agreeing the total in the subledger or the list of the specific asset, equity or liability. But I still need to make sure that that total amount that I'm going to be testing, where I'm going to get the detail, which is now in this list or subledger, matches to what's in the financial statements, because that's what I'm expressing an opinion on. So same risk applies that we had with our class of transaction, that it must match to what I'm going to give an opinion. So I agree the closing amount in the subledger or the list to the general ledger, trial balance and financials. Again, this you need to be specific about the subledger name or the listing. Then I need to make sure that that total does actually add up. Look here, if we look at our account balance, we can see that there is a whole calculation to get to this closing amount. I must make sure they haven't just put a random amount here and then put that random amount in the financial statements and check that they do actually reconcile so I'm comfortable. I must make sure that this really does add up to 100. Okay, so I go and I cast that. List or subledger, once again making this specific to the balance that I'm auditing. Then inspecting that for any unusual items, and once again you can be a little bit specific here, so like for debtors you would see any credit items would be unusual, or for creditors any debit items would be unusual, or for potentially inventory any very old items would be unusual. Okay, but otherwise just saying for unusual items should get you your marks. Then getting the management representation letter for all the assertions, or if the question is asking you for specific assertions, just those specific assertions. And then performing your analytical review procedures. So again, you can go and do your comparisons, compare the prior year to the current year to see if it's reasonable, and you'll be talking about the balance, but you could also then find a related balance or a related class of transaction. So with debtors, a related would be revenue or the allowance. Okay, for PPE, a related would be depreciation, because that's specific for PPE. And then I've got a little one here that I want you guys to take a quick 10 seconds to think, what additional general procedure would you have to do for an account balance? And I'm going to show you what the account balance is made up of to see if you can quickly think of it. So what is different in an account balance to your class of transactions? The difference is that there's an opening. So you have to do a procedure to make sure that that opening balance is correct. So you would now go and agree the opening balance to the prior year audited closing balance in the financial statements. You want to make sure that they've correctly transferred that closing balance in the financials of last year to the opening balance in the subledger this year. Okay, you don't do that for a transaction because we don't roll forward the next year's or the previous year's transactions to the next year. Okay, but now you can see again, you're getting about 10 or so marks for just doing these general procedures. So unless the question specifically says don't do general procedures, you must do them, even if it asks you for specific assertions. So if it just says you only need to do valuation assertion, then you know what? All of these make sense to go into the valuation assertion for your account balance. Okay, so you want to put them down and find out how you can put them relative to a specific assertion if that's the case. So if we move on to developing this template for our account balance assertions, we once again are going to have standard procedures for that assertion, and when we look at the intricacies of the IFRS requirements for different balances at a later stage, we'll start to add some more things into this or fine-tune some of these according to the IFRS requirements. But for now, this is exactly what I need to be considering for an account balance. So, my first assertion, the completeness assertion. Now I'm needing to develop a test that will ensure that all the balances related to a specific balance have been recorded. So what I mean, I'm saying if I'm dealing with debtors as my balance, I've got to make sure that all the debtors balances that make up that total debtor have been recorded. Same with creditors. All the creditors balances that make up my total creditors or trade payables have been recorded. Same with loans. All the loans that make up my loans balance have been recorded. Okay, that's what I'm looking at. I've broken it down into if we've got physical assets, so a physical balance that we can see, and then where we don't. So if I've got a physical asset like inventory or PPE, all of those inventory items must be recorded. All of those PPE items must be recorded. So if I want to select a sample, where am I going to select my sample to test if all of them have been recorded? And it's very similar thinking to our completeness transaction. I need to select my sample of assets from the warehouse. Because now I'm not talking about a source document, I'm talking about the physical item. So from the warehouse or from the floor or from the factory, wherever the physical items are, and I need to trace it to the sub-ledger. So if it's inventory, to the inventory ledger or inventory list. If it's PPE, to the fixed asset register. Guys, we've discussed those above under the general procedure, so I'm not going to keep writing them out for whichever asset I'm talking about, I'll just put subledger, and then you must refer back to what asset am I talking about? Okay, that's the ledger I should be referring to. Okay, but I'm going from physical to the accounting records to make sure that all the physical are in the accounting records, which means they would all have been recorded. If I don't have a physical item, so I've got something like debtors or creditors or loans where I don't have a physical item to be able to check, then the best way I can test for completeness is to compare the list that makes up that balance in the prior year to the list that makes up that balance in the current year to identify any missing balances in the current year which could have been settled and therefore makes sense that they're not there, but also could have been left out in error. So what do I mean? Go and take all the debtors accounts in the prior year and go and compare all the debtors accounts in the current year, and where I can see that last year there was a debtor pick and pay and this year the debtor is not there, I can go and check, is that valid? Is it because the debtor settled the account, therefore 0, 100%? Or should the debtor actually have been there and they just didn't put it through from their subledger? Okay, so just a nice way to do a comparison. And guys, what have I just done here? An analytical procedure. So I compare the individual items making up that balance in the prior year to the current year to help me identify if there are any individual items that are potentially missing, and then I can go and follow up. I don't look at the full total prior to total current year, because that's not really going to give me the detail of where I should be looking. I can do that as an analytical to help me identify if it's a lot lower, then maybe it starts to ring alarm bells that maybe they have left things off, but to get into where I have to do the individual items making up that balance in the prior to the current year. And then guys, I said to you, ISA 505 had additional procedures in the event that you were unable to get an external confirmation for creditors and or debtors. And for creditors, they had that additional procedure which they said was subsequent payment testing, and for debtors, which we'll look at under existence, there was that subsequent receipts. Okay, so subsequent payment testing is going to help us to identify any potential missing creditors or loans. How we go about doing it: we select payments from the bank statement post year end, we trace those to the invoice and the goods received note, and we see when did risks and rewards transfer. And if they transferred prior to year end, so the goods were delivered before year end, which means they need to have raised the creditor before year end, even though they're only going to pay for it after year end, we need to go and see that a liability or an accrual was raised at year end. Okay? If I see that it was risks and rewards did transfer before year end, but they didn't raise the liability or the accrual, they just actually paid for it post year end, it shows me that they have understated their liabilities and accrual. So just because they're paying in a few days' time does not mean they cannot record that liability. Okay, so some kind of evidence after year end can help me to identify if there is something missing at year end. Okay, opposite to the existence, I'm going to quickly deal with this again here because we've just done the creditor side of things, the subsequent payment. Let's look at subsequent receipts. It's specifically now for loan receivable or debtors because they actually pay us. So I select a sample of receipts from the bank statement post year end. So I go into the bank statement after the year end. I then get any receipts from the debtor and I trace those to the debtor's remittance advice. Go back and have a look at your cycle, guys. When the debtor is going to make a payment, they send us a remittance advice which details the invoices they are paying. I then get the invoice from that remittance advice and or invoice number from that remittance advice and I go to the invoice and the delivery note to see when risks and rewards transferred for that invoice. When did we deliver the stock to the debtor that the debtor is now making payment for? And if that was before year end, then it means that that invoice forms part of the debtor's balance before year end, and so the debtor existed. At least that invoice amount for that debtor existed at year end. So subsequent receipts will help me to prove if a debtor's balance exists, if that receipt related to their balance at year end. So if we're unable to get that external confirmation from the debtor, this testing will prove, why would they be paying for an invoice that didn't exist? Obviously, they're settling a balance that existed, so I'm comfortable with that. So, having said that, we are now at existence and we want to ensure that all the balances do exist. So if there's a physical asset like inventory or PPE, where and how am I going to perform my test to make sure that what they've got in their accounting records is valid? It does exist. They haven't put assets in the accounting records that don't exist. I will select my sample of assets from the fixed asset register and go and trace it to the physical assets to make sure that the asset does exist. Okay, where I don't have a physical item, where I've got a debtor or a loan receivable, how can I ensure that that asset exists? Or, guys, where it is a physical asset, but it's not at their premises, so like consignment inventory. How can I prove it? It's sitting with somebody else. So there's a balance with a third party. I can get an external confirmation from ISA 505. And remember then, we've just done, if we don't get that external confirmation, well then the subsequent receipts could help me get evidence over the existence. Okay, nice guys. Valuation and allocation.